Hello everyone and welcome back to a new video on the channel. I know it has been a while. It's been, about almost 2 months since I last posted a video. And the reason for that is because it's been a pretty crazy couple of months and I've just been, not as with the videos, been quite lazy with it. So apologies for that. But in this video, it's going to be a slightly longer video here, kind of detailing my investment plan for 2023, 2024 with the ISA, with the stocks, my single stocks, dividend stocks, and all that good stuff. But before we get into this video, if you could please hit the like button for me, subscribe down below to the channel so you don't miss a future video. I do regular videos kind of documenting my stock market journey. And with that said, let's jump into it. So I'm in the UK. All of the money that you see is in pounds because I am from the UK, right? And that's our currency. So with that said, let's go ahead and jump into this video, okay? So as you can see, if we go to the portfolio, we'll start off with my ISA. We currently have an account value of £51,666.72, which 6,600 that is free funds, and the rest of it is invested. So if we take a look at the ICE utilization, you can see I've already deposited about 11.3K for this year. So I've been depositing in this is my third year depositing into the trading 212 ISA account. And as you can see, we'll have 60K in this before the end of the tax year. We have about 8.6K left to go ahead and do before the end of the year, which we will do that very soon, probably in a lump sum. I'm just kind of consolidating some of my savings, all that good stuff. And going on the savings, if you are from the UK, you're currently able to get 3.71% instant access on your savings up to 250,000 with the Chip app. So I've moved about 20 grand into that account, just that I had for an emergency fund and some money that I have in savings ready to be invested. So I keep about a £15,000 emergency fund. I'm 21 from the UK, almost 22, so I don't need a huge emergency fund. So yeah, I keep about 15K as an emergency fund, which I moved that. Previously, it was in Monzo, which is my main bank account, which was getting like 2.3%. And then Chip came out the other day, updating their rate to 3.71. So I went ahead and moved that 15K over. Plus, I have another few thousand in there ready to be invested. So I will move this over to the ISA soon when I want to go ahead and buy up these stocks here. Okay, so if we take a look, you can see, if we take a look over the last 3 months, it's been a bit of a rocky ride. I think before the last time I made a video, I was down quite a bit. As you can see, we were down about 1.3K. And then it has slowly moved up. And we are now currently, this morning, we were in a profit for the first time in a while. Like even if we look over the last week, it has been a pretty rough ride. Last month, we were in a slight profit. And then, of course, we took a massive dip, down about £1,000 at the start of May. And then we have started to climb back up. So yeah, if we take a look at my investments and how things are looking, the S&P 500 over the last 3 months has kind of been, pretty rocky, down 0.86%. But I mean, we are up. As you can see, we're up 1.04%. We've got about 22,000, almost 23 grand in here. We have an emerging market ETF, which again is currently down 4.61%, which over the last 3 months is down 5%. So not looking the best there. Okay, we have an all-world dividend yield. I still wanted to have some dividends in my ISA because my long-term goal still is dividends. However, in my dividend account, we have consolidated a lot of stocks, and I'll tell you why that is in a bit. Okay, so the Vanguard all-world dividend yield, the reason I have this in the ISA is because I still want some dividends. I think this pays like a 2 or 3% a year dividend yield. Actually, I can go ahead and check that out right now. What's the ticker here? VHYL dividend yield. Let's take a look. So yeah, they pay 2.25% per year, which isn't too bad. I mean, I know it's nothing crazy, but again, it's not very low. So let's take a look. So we got 2,900, let's just round it up, times 2.2%, 2.25% per year. So it's about £65 a year in dividends. Nothing crazy, but again, my ISA is long-term tax-free. If you don't know what an ISA is, if you're from the US, an ISA stands for an individual savings account. You can have cash or you can have stocks. Now, if you have cash, you're probably getting like something like 2, 3, maybe 4% a year on your cash through a provider that does a cash ISA. And then a stocks and shares ISA, any stocks that you make money on. So I can pull all of this money out whenever I want. I could take this 23K out and take this £233 profit, and I won't have to pay tax on that, which is very nice. So we have the FTSE All World VWRL here, which is currently up 0.18%. I only recently added this. That's why there's only £1,400 in here. Okay, we have the FTSE 100, which actually, let's take a look at 3 months. 3 months is down 1.5%. The FTSE 100 is down 2.66% over the last 3 months, but you can see we're currently up 2.93% on that. iShares physical gold has been doing very well. Gold has been going crazy. I do own some gold, which is stored in Singapore, and that has been doing very well as well. And I thought I'd add some gold into this portfolio just because it's it's a pretty solid investment long term, as you can see. Okay, so iShares Global Water here. This is currently up 1.6%, down 4.35% over the last 3 months though. And as you can see, it has been a pretty good ride with them. And then the global clean energy is down 6.78%, and I am down 7.35% on this one. So if we take a look at the pie, this is how we have this currently allocated. You can see we've made £397 in dividends, which have been all reinvested. So if we go to holdings, you can see here we have the S&P 500 at 50% weighted. I want 50% of everything that I invest in the S&P, just in the in the US stock market. Pretty safe bet there for me. We have the FTSE All World at 15%, which again, this will climb up. I can rebalance this, and if I rebalance this, it will sell a ton of my S&P 500. It will sell a ton of these stocks and buy a ton of All World, which I don't really want to do at the moment. We have Global Clean Energy at 5%, FTSE All World High Dividend Yield at 5%, iShares Gold at 5%, Emerging Markets at 5%, and Global Water at 5% as well. Okay, so that's how the portfolio is balanced. And I do want about 60K in here. And the reason for that is because in the UK, you're protected by a provider up to £85,000 by the FC. I think it's the FCS or something like that. Financial, I can't remember what it stands for. But yeah, you're protected up to 85K if the broker goes bust. So I can't have more than 85K in Trading 212. So we're going to have 60K in here by the end of the year. Okay, and then also if we take a look at my dividend portfolio, which is going to shock a lot of you, as you can see, the value is now only £10,500, which was over 22K the last time, or over 20K the last time I made a video. So as you can see, we had a massive change and consolidation of my dividend stocks. Now, the reason for this isn't because we're down. We're down about 11.54%, or about £1,300. If we go to the max, you can see we had 22K invested at one point, and you can see I started pulling from that pretty heavily. Actually, I think it's only in the last month. Well, let's see the last 3 months. Yeah, so in the last couple of months, I've started pulling from that massively. I've taken about half of it out. And the reason for that is to fund the ISA. Now, I want to get the ISA maxed out every single year as my first point of call when it comes to any investing. And the reason for that is because of simple reasons: tax. Okay, you don't pay any tax on your ISA. So I've consolidated a lot of the winning stocks that I had, a lot of the profits I took, and some, 5% losses and whatnot, where it was a couple £100 loss, like £50-60 loss, and consolidated that. And then I went ahead and put that into my ISA directly in Trading 212 because I want to get that ISA maxed out first. So the stocks that I have left in here are the ones that are down pretty heavy. You can see Anley Capital Management is down 17%, Apple Hospitality is down 9%, British American Tobacco 21%, Charles Schwab 38% is a massive loss, Ellington Financial down 10%, which isn't too bad. Not too bad there for Ellington. I might go ahead and sell this one out because it is a 14.5% dividend yield, which is pretty high, and I don't think they can sustain that for very long. So I may go ahead and sell this at a 10% loss. Global Water Resources is down 19%. Horizon's only down 3%. So I may go ahead and sell Horizon as well, considering that has been rallying back up over the last month or so. So I may go ahead and sell Horizon. LTC Properties is down as well, 17%. Oxford down 9%. Pembina Pipeline down 13%. Prospect Capital down 17%. And Realty Income down 8%. Now, I'm not going to sell Realty Income. I don't have any plan to sell realty income. This is my long-term real estate investing is these REITs. Realty income brings me about £20 a month. I do believe I had a dividend payment from them the other day. If we take a look here, where was it? Yeah, you received a dividend payment of £17.34 from realty income. So I'm going to continue adding to realty income. I put about 5,000 in here, I do believe, just above 5k. And I will take my 4.93% per month. 4.93% per year distributed every month. So as you can see, the banking stocks, we've pretty much cleared all of them out. The dividend stocks, a lot of them have been cleared out as well. Just the losses are in there. Monthly dividends, we still have quite a bit of money in there. And real estate has also been taken out other than realty income. That's the only one we have. So as you can see, the total gained here is £8.37 in dividends from real estate, £102 from the monthly dividends, £188 from the dividends, and £11 from the banking. Now, bear in mind, I only had this portfolio for like 2 months before I sold it, and we made a good amount of money on the stocks that I have sold. So I'm going to wait for this to recover slightly, and then I'll start. Well, we're already up kind of like £100 over the last day, so I'm going to wait a little bit more and sell some of these holdings off. I do have some of these stocks here, which I do plan on buying once, once we're back ready investing in dividend stocks. I'm just going to get this. How much is left? Like 8,000 something left in the ISA before I start buying dividend stocks again. And yeah, I am going to deposit 8.6k. The reason I've done this again is because I wanted to see how much I could pull from profits into the ISA before I went ahead and touched money in the bank account and in the savings and in the emergency fund and whatnot. So that's the reason I've done it. Nothing too crazy there. Now, I am looking at adding Apple and Microsoft as single stock holdings for the long term. As you can see, though, yeah, Microsoft is a massive, almost all-time high. So probably not a good buy right now. But I do plan on adding Microsoft to the portfolio and Apple as well as long-term holds. But as you can see, these companies are up massively. Now, one crazy statistic that I saw yesterday was Apple's market cap is now bigger than the entire market cap of the UK. I think the UK has like a $2.7 trillion market cap as the entire country. And Apple is 2.7 trillion just in that one company, which is insane. I think Meta's been doing a pretty crazy run over the last couple of months as well. Let's see what else. Nvidia, I believe, is up. Wow, 41%. That is absolutely crazy. So yeah, there's definitely a few stocks that I do want to add, single stocks for long-term holdings. But for now, I'm focused on the ISA, and then I will start to go ahead and jump into my Dividend Kings portfolio and probably start here before anywhere else. So we got Pepsi, Procter & Gamble, Altria, Lowe's, 3M, Target, ABVC, Biopharma, ABM, and Farmers and Merchants. And I'll definitely add some more into this as well. But yeah, guys, that is the update. That is what I'm going to be investing in for the rest of 2023. Is going to be the ISA first of all. Now let's go ahead and move over to Vanguard because I have an update here. Let me log into this, and also let me log into Free Trade because, as you know, I currently hold my SIP over at Free Trade. Which, bear with me for 2 seconds, just whilst I log in over here. Because I've gone ahead and done something with the SIP that we will show you in just a second. Let me just see. Free Trade, log in, and let's log into Free Trade on the web app. So let's go ahead and bring this over. Yeah, let's bring this over here. So as you can see, over on Free Trade, we currently have a portfolio, SIP portfolio, of £1,703, which is currently distributed between 4 stocks: FTSE 100, S&P 500, the FTSE All World, and the World Dividend. So if we take a look at the last 7 days, you can see we're currently up quite a bit, over like 20, 30, 25 pound. In the last day, we're up about £6 or £7, something like that. And I add £170 to this every single month. Now, the pound value over the last, this is the last day. Yeah, over the last day, you can see we're up pretty nicely on these stocks here. Okay, so I'm going to continue to invest in these. However, I have gone ahead and moved my SIP over to the trusty Vanguard. So if we take a look at Vanguard here, let's move this over. You can see Vanguard, we have like £7 in here, right? I put £5 into the ETFs, which is just my normal account, if you like. This is just my, standard account, if you like here. General investing account, which I just put in there to open it. I have my ISA, which I did contribute to this in like 2020, I think, but I put like £2 in. And then the pension, we have a transfer coming over, which if we take a look at my pre-retirement pension, we can have a look. Where does it say the investments here where I can see the pending ones? I'm very new to track progress. Here we go. So yeah, I have my free trade SIP being transferred, okay, which will take a bit of time. But yeah, I'm transferring that. And if we take a look at orders, we can see that these are pending. Okay, so we have the S&P 500. We have one of those pending £100 there. We've got the S&P 500 here, £595 pending. VOOC 425, and All World is £425 in pending orders. Okay, so yeah, I'm waiting for that. I'm also waiting for my Life Strategy 100% equity fund of a whopping £5 pending there. So yeah, I'm moving things to Vanguard. Now I do plan on investing in my ISA in the next financial year. So next year in April, I plan on starting to invest in my ISA on Vanguard, just because, I don't really want more than 85k in Train 212, and I plan on putting the single/dividend stocks in Train 212 for now, until I find a better single stock brokerage. I don't really want to go with something like Hargreaves Lansdown because of the £12 share fee, which I think is pretty extortionate. So I don't really want to do that. So I'm going to put all the single stocks in Train 212 for now. So when I hit that 60k cap, I do believe I will hit that 85k limit pretty quickly, because we've got about 62k in Train 212 at the minute. So really, we only have about another 20k before we're maxed out at that limit of 85k that we're protected by, and I don't really want to go over that. But with Vanguard, I feel pretty safe going over that 85k limit because it's Vanguard. They've been around for decades and decades. So that is my plan of action for this year. I'm going to continue, and once I've maxed out the ISA here, I'll then start putting money into single stocks again and riding out this flat kind of down market. Kind of this uncertainty in this market. I do believe that now is probably a good time to, for me anyway, just keep dollar cost averaging. If I don't plan on selling short term, then I'm going to keep dollar cost averaging, just because we don't know what's going to happen. Is there going to be a recession? I don't know. It's probably a good bet to say that there is going to be, if you're a betting man or lady. But for me, I'm just going to keep dollar cost averaging. I'm not smart enough to time that market. So I'm just going to keep dollar cost averaging and collecting those divvies. And then Vanguard. And then also I want to build a portfolio on Invest Engine with just some spare cash in the Robo Investor, just for some fun. So I will document that when I start doing that at some point, probably this year. Guys, thank you for watching. That's going to be it for the video. Pretty long one, I know, but that is an update on what I've been doing with my investments and consolidating things and moving my pension into Vanguard. Thank you guys for watching. I hope you enjoyed. Subscribe if you're new, and I'll see you in the next one. Goodbye.